Ladies and gentlemen, good day and welcome to the Steel Authority of India Q3 FY26 earnings conference call hosted by Nuvama Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Ashish Kejriwal from Nuvama Institutional Equities. Thank you, and over to you, sir.
Thank you, Rao. Good afternoon, everyone. Once again, we welcome you all for Q3 FY26 post-result Concall of Steel Authority of India. We are pleased to host Dr. Ashok Panda, Director of Finance, who is along with his team. Now, I will request Mr. Panda for his opening remark, and thereafter we will open the floor for Q&A. Over to you, sir.
Yeah, thank you, Mr. Ashish Kejriwal ji. Good morning, everyone. I welcome all our investors and analysts who are joining this result Concall for the financial results of SAIL for the quarter Q3 and 9-monthly FY25-26. Before we move to Q&A session, let me brief you on the results for the period. In the economic scenario front, global economic scenario front, beginning with global economic scenario, the uncertainties and volatilities are almost stabilizing right now, as it seems. Global inflation has also been largely steady as of now. The projections for GDP has improved in line with the same for economies individually, as well as the regional as well as global averages. Global growth is projected to remain resilient at 3.3% in 2026 and expected to be 3.2% in 2027. Rates similar to estimated 3.3% outturn in 2025. The focus marks a small upward revision for 2026 from the present levels. The projections for India have also been revised upwards to 6.4% from 6.4% to 7.3% by various agencies. So it seems the economy is going to grow at a better rate. So far as global steel industry is concerned, the landscape for the global steel industry is influenced by economic trends, trade policies and technological advancements. Of late, it has seen positive movement in the demand and cost push in the prices, primarily because of increase in coal prices as of now. In the Indian steel industry front, Indian steel industry continues to enjoy robust demand for steel, with consumption during 9-monthly FY25-26 grown by almost 7% over CPLY. The growth in production of crude steel has been still higher at around 9.5% during the same period. This has led to India again becoming a net exporter, as exports grew by around 33% to stand at 4.8 million tons, vis-a-vis imports, which has reduced by about 37% to stand at 4.65 million tons this time. When we compare to last year, the scenario is totally different, because this time the exports have been much more than the imports, and of course the safeguard duty also is playing a role in this. We can find that there is some sort of stability in the domestic markets from December onwards. We will now discuss about the company performance of SAIL for Q3 and 9-monthly FY25-26. Coming to the performance of the company during 9-monthly FY25-26, the highlights are as follows. Crude steel production grew by 2% from 14.08 to 14.35 million tons, whereas saleable steel has grown by around 4 to 5%. Sales volume grew by 16.3% for the company, and we have started outreaching to the retail as well as other consumers. And because of this huge growth in sales volume in 9-monthly, it has resulted in an inventory reduction by a good number, as well as reduction in borrowings. Revenue increased by 9% from 73,162 crores to 79,997 crores, broadly in line with the growth in the volume. And PAT increased by 60% in 9-monthly of this year as compared to CPLY last year. It is highlighting operational efficiency liquidation of inventory due to sales growth and cost optimization as well as good treasury management. So in other words, we can say it is due to better financial prudence. Reduction in debt is close to 5,000 crores in 9 monthly, and in January alone, we have again reduced by around 2,000 crores, and momentum continues for February as well as March. Going forward, as the monsoon season and festive seasons are already over, we hope that the market will see an uptick in terms of pricing in quarter 4. As the coal prices continue to remain range bound, in fact, little on the higher side, and the market support is also there. So the margins will remain good in quarter 4. This is what we're expecting. So quarter 4, again, there will be a better growth for sale. With these few words, I hand it back to Mr. Kejriwal for opening the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from Amit Lahoti from MK. Please go ahead.
Thanks for the opportunity. In the first quarter of FY26, we took 1,000 crore of inventory write-off due to falling coking coal prices. And now that prices have gone up, was there any gain in Q3? And then how much it could be in Q4 at the current prices? That's my first question.
Should I answer this question?
Yes, sure.
Answer to this question is that actually in the first quarter, as you said correctly, it was close to 1,000 crores of impact in the stock valuation rate on P&L account. In quarter 2, it was not much. In quarter 3, we had a positive, and that could be somewhere around maximum 100 crores. In quarter 4, because the coal prices are on the rise, we expect that the cost of production is going to go up in quarter 4. So we've not yet estimated, but yes, it will have a good positive impact on the profitability as well as the margins, so to say.
So any broad number at the current prices, how much that could be? Like, is it like?
I mean, we can't exactly say. We can't exactly say primarily because the coal price is increasing, but now it is a little bit stable at $251. But at the same time, production level is also increasing, so they will nullify each other to some extent. But even then, we believe there will be an upward positive impact on the profitability. The numbers anybody could guess could be around 200, 300, 400, but that we cannot say as of now. But obviously, it will be a positive one based on our guess.
Okay, and then my second question on the expansion plans. As we have a sizable cost disadvantage compared to our peers to start with on the margins and cost, how much it could narrow once we start getting in the incremental volumes from expansion projects, particularly ISCO, which is coming like 2 years from now? How to think about that?
Yeah, so far as ISCO is concerned, actually, we have a project over there which is around 36,000 crores estimated, and most of the major packages have been already ordered out. So the ground activities have already started. They are going to finish in 3 years' time. That is the timeline. And we believe after we get that, then the production volume as well as the margin which will come from there will really bolster our profitability to a greater extent. And for that matter, to accommodate those borrowings, we've already reduced our working capital borrowing quite a lot. As I've already told, we're keeping a margin to accommodate for the expansion capex.
Okay, so is it possible to quantify that number either in terms of, say, EBITDA per ton or cost per ton, how much it could benefit once it comes in? Any kind of...
See, those will be new facilities. So right now our EBITDA per ton is, I think, just one sec. EBITDA per ton is, so those numbers will be more than that. right now around 6,000 rupees, hovering around 6,000 to 7,000 rupees right now. So quarter four will be better than that, and we believe that ISP expansion, once expansion is over in time, then the numbers would be more than 10,000 rupees per ton from
Right.
ISP
Okay.
expansion.
And just as a follow-up to this, is there any revised capex guidance for FY26 and 27?
Yeah. So the capex guidance for FY 26-27 is 15,000 crores.
15,000 crore for 27.
For 26-27. That is because actually some of the capex payments towards ISP expansion, ISCO expansion will be there actually next year.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from Pinakin Parekh from HSBC. Please go ahead.
Yeah, thank you very much. So my first question is, can you quantify the price increases that you have taken in December and Jan across flat and long products?
Let me just tell you. Long because. You're talking about Jan or December?
December and Jan total.
I mean, actually, the market started improving from middle of December, actually.
Mm-hmm.
Till November, it was subdued, kind of. September, October number was quite subdued situation. So towards the end of December, it started increasing. Market started improving and started increasing prices in long as well as flat. So in December, when we look at the actual impact increase of the prices got reflected in January. It did not get reflected in December, either for long or for flat. So the real increase of around, say, 2,000 to 2,500 rupees was reflected in January in long, and around say 3,300 to 3,500 rupees in flat in January, so far as sales price is concerned. But the actual increases happened during the month of June in 2-3 tranches. So all of that will get reflected in February. So that means in February, the real increase in sales price will be quite encouraging. Will be more. And primarily because the coal price also is having upward journey. So that's the reason why it will be price increasing in domestic market.
Sure, sir. Now, what we understand is, sir, that the price increases at the trade level in India have been much larger, but the company level price increases have been lagging so far. So do you expect further price hikes at the company level in February and March?
That's what I'm saying actually. In the month of January, because the price increase took place in 2 or 3 tranches during the month. So all of that could not be reflected because it got averaged out in the sales price of January. So that is getting spilled over to the next month. Means that February actually you will find a good jump in sales price. And at the same time, I'm telling you that actually the coal price also there's a good jump. So kind of they're going in the same in tandem.
Sure. And what is the coking coal cost increase that you see in the fourth quarter? Because spot prices have surged to $250, averaged $184 in 3Q. So what kind of cost increase should we see?
Just one minute. Just 1 minute. So when we talk about imported coal price, so like in January, the average imported coal price is 18,500 rupees. And which is expected to increase by 1,200 rupees in February, which is 19,700. And this is because of the weighted average arrivals and the stock quantities and all that. But otherwise, as you said correctly, the index has gone up to $251 per ton. It was hovering around $190, $185, $190. So in February, we were expecting around 1,200 rupees increase in consumption rate will be there. And in March, there could be an increase of another 1,000 rupees over and above this.
Got it.
And we don't know whether it will further increase beyond 251 or it will then taper down. I personally feel that actually it should not increase much. It will stabilize, and after that, after the situation improves in Australia, probably it will taper down.
Understood. And so my last question is that if you look at the sales volume that you reported, steel sales volume, how much was NMDC volumes in this, and what would be the margins in that?
Come to that, NMDC volume, just one sec. Total sales volume, total कितना है? Just one second. So our total 9 monthly sales. Okay. So total sales volume is 14.6 million tons, and NSL is almost 1 million tons.
Out of that, NMDC is 1 million ton.
Yeah, NSL for that matter. It's 1 million tons.
And so the margins on that steel sales would broadly be the same what you are seeing at your operating company? They are higher, lower? I mean, how long will this arrangement continue?
See, this pricing is exactly as per SAIL, Steel Authority of India Limited. So we're targeting their products mostly in the south market. So that is going exactly in line with our own products. So there is no difference in their pricing compared to SAIL, pricing of SAIL so far as the quantities that we are handling. There are some quantities which they are handling. We can't comment on that. So this is at par with SAIL products in whichever market it is going.
And the pricing is the same, but what about the cost, sir?
I mean, it is kind of an arrangement between NSL and SAIL. So the delta we can't exactly say right now. I have to check it out. But mostly we are maintaining a price parity in the market without any disadvantage to SAIL or NSL. So it is to an advantage to SAIL as well as NSL as well as to the market players.
Got it. Thank you very much, sir.
Thank you.
Thank you. Next question is from Vikas Singh from ICICI Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, my first question pertains to our employee cost, which has surprisingly gone down on sequential basis. So first thing that what is the main reason? Secondly, how should we look at the employee cost going ahead in the next year, since there is a mandatory wage revision would be coming in?
Yeah, let me come to that actually. Salary wages which is around 11.5% right now. So as compared to last year, just one second, it is almost at the same level. If you look at last year, you're talking about quarter 3 or what?
Sequential was a decline.
No, it is almost at the same level because I'm finding that whether it is quarter 6 to quarter 3 or even if you look at quarter 2 to quarter 3, then there's a reduction. That is just an adjustment of the actuary and all that. So that's a different thing. But broadly, if you look at 9M to 9M, both are remaining almost at the same level of 3,100 crores. Last year also, 9M was 5,943 and now it is 6,080. Broadly at the same level.
I was looking at the 3Q. If you look at the last quarter was 2,900 and almost 39 crore. So it has come down almost 100 crore basically on a sequential basis. So
right.
So what was the actual valuation difference which had not come this quarter, or there was a reversal or provision? If you could give me that number.
There are two reasons for it. One is actuary, which is depending on the discounting factor. That's a different thing, and factor is increasing. The other thing is basically the gratuity component. As you can see that in H1 we have taken a hit because of that. 25 lakhs. After achieving 50% in ITA, then it was increased to 25 lakhs. So that was the reason why actually Q2 was appearing to be on the higher side. And also the discounting rate is increasing. So all put together, in Q3 we are finding that it is appearing to be little less than that. And the same thing will continue in quarter 4 as well. Now coming to your other question of salary revision from 26, that will happen from 27, 28 onwards. It is not from 26, 27, just to clarify, because it will be applicable from 1st January 2027. So most of that impact will come from in 27, 28. So, and at the same time, as you are finding, we are having around 50,000 number of employees on our roles right now who are legacy people. So every year there is a hefty reduction in the manpower. So on the whole, the manpower reduction, because of manpower reduction, the cost is going to go down, and because of pay revision, which we do not know how much it will be calculated based on the guidelines. Guidelines not there in position right now. So we'll see plus and minus. There will be plus and minus both the sides. So there will be some net impact maybe, but that will come in 27, 28, not now.
Noted. And so my second question pertains to our product mix. Since we have already reached at least the production volume peak out has happened, is there any scope for us to enrich our product mix, bring down the semis for the next year and bring up the EBITDA per ton? So, or the demand of these products are such a way that this would be difficult to do. So if you could give us some thought process on the company side on this.
Yeah, let me just tell you, now before I give the number, let me tell you the context, is that we've been trying to reduce the semis as much as possible. One is by increasing our own production. And right now, semis percentage is 10%. If you compare the previous years, it is less, because our focus is on having finished products more than the semis by taking 3-4 pronged action. One is, in the mills, we are trying to increase the production as much as possible by having more availability, better availability of the mills, better care regarding the equipment, etc. Number 2, we are having conversion contracts in place as well. We are maximizing that. So through these two things, actually, we are trying to have more finished products in the market compared to the semis. So the semis percentage has been coming down gradually. Number 2, at Durgapur Steel Plant, we've started one project which is 1 million ton TMT bar mill. So that will come up maybe 2 years from now. Already activity started, ground activity started. And once that comes up, you will find that semis will be almost very close to 0% at that point of time. So it is only a matter of time that we will see that semis will be 0.
And by when this could be possible?
I mean, it will take around 2 years time from now. 18 months. 18 months, yeah. So it is 18 months time. Already groundwork is already started. So if we are end of 25, 26 right now, 18 to 24 months is the timeline. You can say 18 months timeline for that, for completion of project activities. And after that, stabilization and commissioning, those things will be there.
Noted. So just last
sometime in 28.
Yeah. So just one last question about the news on the accident at the plant during 3Q. So just wanted to understand, had this anything spilled over to 1Q as well, or overall production-wise, etc., there was no loss?
If you're talking about the accident of...
basically, because we are having this kind of incident every year, so
let me tell you
how to control this?
Correct. So if you're talking about the incident of Bhilai Steel Plant SMS, because you're not specific on that, are you asking about that question? If that is the question,
there was one incident happened in Bokaro and then just recently in Bhilai. Within a span of 4 months, there were 2 incidents. So I was more concerned about the recent Bhilai, which could have impacted the 4Q performance.
Let me address these 2 questions. One is the Bokaro, which we also discussed during H1, and one is the Bhilai, which happened right now. So far as Bokaro is concerned, actually that is already sorted out. It impacted us in Q1, in Q2 greatly. And now the SMS, both the converters in SMS, steel melting stuff, they are in full gear. And they are producing at almost 100% target levels. So their SMS is alright, because of which blast furnace, they did not have any problem. So blast furnace is picked up, hot metal is picked up, crude steel is picked up. They are almost operating at 98% to 100% capacity right now. That is a story regarding Bokaro, and they will go like this in Q4 and going forward also like that, because we have taken certain actions that in future such tube leakages can be avoided in the converter. because we got the spare parts and all that. Now, so far as Bhilai is concerned, Bhilai SMS is concerned, again it is back on rail. In Bhilai SMS, the converter which had the vessel changed. So after that, actually there is a bit of problem because of which spillover of metal had taken place and it had burnt the electrical cables. So and it was down for around 15-20 days. Now it has come back. So the production at Bhilai Steel Plant has again picked up to its normal level of around 18,000 to 18,500 tons per day of hot metal. So it had impacted us around 15 days to some extent. Around 2,000 tons per day was the impact in physical terms for around 15 to 16 days. Now it is completely all right. And in future also in quarter 4, it's not going to have any problem. So all our 5 ISPs are full blast right now. They are producing at the highest levels. And this trend will continue for quarter 4.
Thank you. Before we move to the next question, a request to participants to please limit your questions to 2 per participant so that the management is able to address questions from all participants in the conference. The next question is from Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good afternoon, sir. So the first question, was on the bridge, EBITDA bridge, from in your presentation from 2Q to 3Q. There, one of the negative things has been shown as the volume impact. But I thought, sir, we had an increase in volumes compared to on a sequential basis. So, any reason for that negative impact due to volume?
Yeah, just one second. Between quarter 2 to quarter 3, no?
Yes, sir.
Yeah, that's primarily because of the reduction in production of saleable steel. Even if there is improvement in hot metal and cold steel to some extent, but saleable steel came down because of the reason that actually in the previous quarters at RSP, new hot steel mill has more capacity. So they were producing more by taking slabs from Bokaro Steel Plant. By taking slabs from the excessive stock of Bokaro Steel Plant. So right now, because in Bokaro, hot steel has picked up and everywhere it is picked up, so in-process stock has come down at Bokaro Steel Plant. That is the reason why actually at RSP, the saleable steel level remained low. So that was the primary reason for reduction in saleable steel volume in quarter 3 compared to quarter 2. In quarter 4, all the 5 plants, they have already increased their production because all the capital labor, everything is over. So all the mills are in full blast, all blast furnace as well as SMS, they are at 100% level or more than 100% level. So availability of slabs for Rourkela Steel Plant to meet the more requirement, the higher requirement of XSM2 will be there. We'll be sourcing slabs from Bokaro as well as Bhilai to Rourkela to have that delta production at XSM2 at Rourkela Steel Plant. So that was the reason.
Okay, so primarily it's because of lower saleable steel production, not the sales volume. So that's led to the impact.
Yeah, as you can see, sales volumes have picked up like anything. Despite having bad market, it was around 16% growth in 9 monthly compared to previous year.
Okay. So the other thing, the same thing, input price cost, there's a positive number. So is this, I thought coking coal costs would have gone up sequentially. So could you just clarify that as well?
I mean, coking coal cost actually went up after December. And it is also having a savings of the power cost in that. Coking coal partly and mostly because of the power cost, because we are trying to reduce our power cost by sourcing it from RE power sources. So we've taken certain actions in different plant units, and that has given rise to some savings.
So this should be structural, the saving going in?
Yeah, this is the structural. It's a part of that, and we'll further improve. We are working on that. It's a requirement as well. RE power is a requirement for us, as well as by going for RE power, we are getting also price advantage in certain cases.
Sure, sir. Also, if you could just, the NSL volumes you mentioned for the 9 months, could you also just give us the third quarter volumes?
Third quarter volumes, let me just hold on. 0.37, huh? 0.37 million tons, quarter 3.
Sure, sir. Okay, thank you.
Thank you very much.
Thank you. Next question is from Rashi Chopra from Citigroup. Please go ahead.
Thank you. On your realization, what was the exact change in realization sequentially? NSR?
Which one?
NSR. NSR, what was the change from 2Q to 3Q?
From Q2 to Q3. In Q2, if you look at average NSR, so in average NSR, there is a drop. In Q2, it was 48,836. But in Q3, it was 47,735. But if you compare between long and flat, in long, it has increased from 48,885 to 49,021. In flat, it dropped from 48,790 to 46,580. So there was a drop in NSR in flat as compared to long. So average NSR also there was a bit of drop.
Then on the coking coal cost, you mentioned that the Jan cost was 18,500. I assume this is your blended coking coal cost, right? Not included.
Yeah, that is actually average. Yeah, you're correct.
And what was that number in the third quarter?
Third quarter number was 18,351.
18,350?
Yeah, third quarter number is 18,350.
And on the capex, you mentioned that in FY27, the capex is going to be 15,000 crores. For this full year, FY26, what is the capex?
For the full year, initial guidance was 7,500 and then final guidance is 10,000 crores. It will be anything between these two.
And how much has been spent in the 9 months?
9 monthly figure. Yeah, so 9 monthly figure was 5,427.28 crores. 5,428 crores. 5,428.
Got it. Thanks. Just last question for me. On the volumes, what are you targeting for this year and next year?
Yeah, just one sec. So this year, if you see, April to December, hot metal volume is 15.14 million tons. And by year ending, we expect that is just one sec.
Or sales volume is good enough.
Sales, I'll tell you. Let me complete this one. So year-ending figure of hot metal could be in around 20.5 or something like that, close to 21 million tons. So next year we're targeting 22.5 million tons of hot metal.
And on the sales side?
On the sales side, let me tell you, so sales volumes are on the higher side, and so if my sellable steel in 9 monthly is 14.2 million tons, 14.6, and total sales volume in 9 months is 14.6, so it is going beyond the production levels, and we are reducing our inventory. Our inventory levels have come down. In 9 monthly, if you look at, our inventory levels are down by around 0.3 million tons as compared to starting of the year, both in process as well as sellable steel put together. So further reduction will be there. So going by this, we'll be able to achieve a sales volume around 19.5 year ending, which will be more than the production.
Thank you. Next question is from Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good afternoon. Thank you for the chance. So first question is, I want to understand at the EBITDA level, is there any contribution from this arrangement of NMDC volumes, NSL?
So let me tell you, actually, as I have already told, in case of NSL products, it's beneficial to NSL to sell as well as to the market players. So that is purely based on the arrangements we've made. But mostly, as I told you, it is just keeping a parity of the pricing strategy of sale in various regions. We are concentrating mostly on the south. We had concentrated mostly on the south, so by 9 monthly is concerned, the quantities have already been told. So there are positive margins. However, the margins are small. It's not very high, but it is giving a market stability. It has given a market stability. So all three fronts people have benefited out of this.
Okay. And so this year when we are seeing about 16% growth, I mean, X of NSL, it's around 7-8%.
Yeah.
So the guidance X of NSL would be what, 18.5 million ton volume for this year?
For this year, if it is 19.5 minus, yeah, you're correct.
But 1 million ton is already done in the 9 months, right? So
1 million ton is already done, and in quarter four, much of quantity may not come. So in a way, if we try to end up at 19.5 sales figure, so it could be somewhere, our own figure could be somewhere around 18.5 to around 18.5 or something like that.
And where can we take? Got it.
Yeah.
And in absence of new capacity, where can this 18.5 go in, say, next 2 years, 27 and 28?
In 26-27, let me address this question for 26-27 first. While in this year, in 25-26, we are trying to finish hot metal at 20.5 to 21 million tons. We are targeting 22.5 for 26-27. That means you can say around 21 million tons of saleable steel in 26-27, and then we can have further growth in 27-28. Once we achieve this particular growth, then we'll have further growth in 27-28. So you can say in 27-28 it could be 23 million tons of hot metal and 21.5 million tons of saleable steel. And after that, we will see that ISP modernization will be there.
Okay. And this is, sir, X of NSL or including NSL 1 million ton?
This is X of NSL.
Understood. So next year CapEx will substantially increase. I think earlier it was around 10,000. Now you're talking about 15,000. So can you give a breakup? And in this ISCO expansion, how much are we spending, and what is the time frame for the expenditure for next 2-3 years?
For next 2-3. See, the ISCO CapEx total will be around 36,000 crores. So from 26-27, we'll have major amount coming from ISCO. So ISCO amount could be in excess of, could be somewhere around, maybe around 7,000 to 8,000 crores in case of ISCO so far as 26-27 is concerned. And after that, we can pick up. Means the peak figure will be in 27-28. And also in 28-29 for ISCO.
Okay. So the completion could be towards the end of 29 or maybe FY30 as well, right?
FY30, yeah. Somewhere around FY30.
Understood.
End of 29 or 30, something like that.
Okay. And sir, the coking coal cost which you shared, so the increase in Feb versus 3Q average is just around 7-8%. Is that the right comparison? Because if you look at the dollar price, it's gone up by more than 20%. So have you got the numbers right? It is 19,700 versus some 18,000.
Which one are you talking about?
The coal cost, sir.
Yeah, coal cost. In the coal cost.
Average 3Q versus spot, can you explain us what is the increase?
The average 3Q actually, which we told it is 18,351, that is basically because of the averaging of the stock out here, as well as the supplies we are getting from time to time. But the spot prices have gone up. The spot price is $251, that is the index price, and based on that actually we have 98%, 97% etc. from different sources. So these prices are getting reflected slowly, partly in February and partly in March, and also the effect is going to come in April as well. As you know, there is a time lag of around 1.5 months to 2 months for these prices to get reflected in the consumption.
Okay.
And also the dollar rupee parity is also impacting this. Both the things
Okay,
are impacting the.
So on consumption basis, what is the quarter-on-quarter increase? Because can you explain that, sir? On consumption basis. Yeah.
Because quarter two was 18,158 and quarter three is 18,351. There was not much of increase in quarter three. But in quarter four, you will find an increase of around 1,500 rupees over quarter three. This is what I'm guessing.
Understood, sir. Understood. All right. Thank you, sir, and all the best.
Thank you very much.
Thank you.
That be the last question, please.
We have one more. The next question is from Tushar Chaudhary from Prabhudas Lilladher. Please go ahead.
Yeah, good afternoon, sir. Thanks a lot for the opportunity. Sir, last quarter we sold around 1,140 odd crores of sale of scrap. How much was this quarter? Scrap and byproducts.
Let me just give the figure. Just one sec. Can you ask the next question before you take up the first question?
Okay. So capex, you are saying 7,500 to 10,000 crores for FY26, and 27 it will be 15,000 odd crores.
Correct.
Am I right on this? Okay.
You're right.
So there were some debottlenecking projects at DSP, RSP, BSP, which we talked about earlier. Can you throw some light on how much capex will do for them?
Yeah, so far as RSP is concerned, they've already completed cast number 4 and the production is going to start now. It's already started over there, so that part is over. So far as DSP is concerned, the debottlenecking brownfield project is already started, and that will take around 18 months to 20 months time.
Which you said the TMT mill.
TMT mill, yeah. Which is said the TMT mill at the same time. After TMT mill also, we are starting one blast furnace over there. We'll knock off one old blast furnace, we'll start a new blast furnace. So along with blast furnace, we have another converter, etc. So beyond TMT mill, we have also approved another package for them. And which will also increase the overall capacity of Durgapur Steel Plant by 1 million ton. So TMT is a mill which is 1 million ton, and that is activity is already started. It will be completed in 18 months time, another 18 months time. And this will reduce the semis to zero. But after that, overall capacity of hot metal and crude steel will increase by 1 million ton through another debottlenecking activity, in which we are going to put up one blast furnace, one converter and caster, and we'll knock off the old one. Coming to your first question, Q2 was 1140, now it is 1279.
1279. Okay, and how much is the finished steel inventory now?
Let me come down. So finished steel inventory, sale as a whole, it is around 1.5 million tons, and in process inventory is 0.9 million tons. Together 2.4 million tons. At the 31st March, it was 2.7 million tons.
Okay, thanks a lot, sir. Thanks a lot.
Thank you very much. We'll take that as the last question. I would now like to hand the conference over to Mr. Ashish Kejriwal for closing comments.
Yeah, thank you, sir. Sir, just before closing, one question from me also. We are talking about 19.5 million ton of sales volume guidance for FY26. So, which means that, and in 9 months, we have already done around 14.6. So, do you want to say that, our fourth quarter volume will be more or less lower than third quarter, or then because of 14.6 we have already done, and we have done 5.15 in third quarter. So, how do you say the volume in fourth quarter?
Yeah, the 14.5 is already done in 9M, and our Q4 volumes will be more than that of Q3. Only thing is that actually in case of NSL, we may not take much of a volume from NSL. That's the only consideration. We want to sell as compared to the other ones, so the NSL numbers may be less in quarter 4 as compared to 9M. That's the reason.
But overall, do you think that we can do 5.5 million ton? Because If that happens, then total volume will cross 20 million tons.
Let's see, we are trying a lot because as you can see in January also we had a stock reduction of around 0.3 million tons, and February and March I'm expecting optimistically 0.3 million tons. So that's the reason we will make endeavor towards that.
Sure. And so lastly, when you are talking about average price increase of around 3,000 in tranches in Jan, so are you saying that we are going to increase further prices in February, or it's because the average price in January will be lower than the spot price?
No, it is there is an upward movement in the market right now because of the coal prices. So as you said correctly, the guidance is that it will be upward.
Okay, sir. Thank you so much.
Even March also.
So, sir, any closing remarks from your side? We'll then end the call. Thank you.
Yeah, thank you very much for all that Q&A session and all that. The second half of the financial year is always the best for steel industry. Things have already started looking up, and we hope that the trend and momentum will continue. Meanwhile, steel demand is also significantly moving up, and with the improvement on the efficiency front and cost control measures, it will improve the margins in the balance period of the year, that is Q4, despite having the coal prices remaining high. And there will be a lot of inventory reduction in this Q4, and borrowings will go down drastically, and because of reduction in the borrowings, the interest cost is going down. As you know, in 9 monthly, our interest cost has come down by 500 crores. We expect that another 500 crores reduction in inventory will additionally happen in Q4. So overall, for the year, the interest reduction could be around, interest cost reduction could be around 1,000 crores. Also, the company remains committed towards sustainable performance, including emphasis on decarbonization, improving capacity utilization, value addition, reducing semis, and achieving cost competitiveness. We are also trying to reduce the cost as well as improve the top line. And you will find that in this particular year, your top line, which was remaining almost at 1 lakh crores earlier, now it is going for a big number in this year. I thank all our investors for their for reposing faith in Steel Authority of India Limited, and I am hopeful that the same shall continue in future as well. Thank you very much.
Thank you very much. On behalf of Nuvama Institutional Equities, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.